Money day, guys and girls. I hope you lot are blessed. Now welcome back to another episode of my midweek updates. You're learning here with Vel, and I want to make it very clear to you guys that this week has been phenomenal. If you guys are inside my Telegram channel, you guys will know I've been able to send out over 5,000 pips, okay? 5,000 pips this week on a few trades, which I'm going to break down and digest for you guys today. But also, there's been a lot of economical factors taking place. We've had the interest rates for the pound, for the dollar, for the Swiss franc, for the Aussie, for the Japanese yen. It's been a mind-blowing week, guys, and why it's really important for those of you who have just come across my video for the first time today is because you need to understand that not every week is going to be as good as this week has been. Sometimes the markets are slow, sometimes the markets are juicy, sometimes the markets are really cruel. But if you are someone who's watching this video right now and you're simply wondering how you can get involved, then all you have to do is click the link in my bio, go over to my Telegram channel. Inside of there, I occasionally provide free trades. I do live stream sessions. I do live Q&A sessions, which I'll be hosting one on Saturday. But I will also give you guys the accessibility of booking a free one-on-one trading session with myself so that I can show you what I do, how I do it, but most importantly, how I can benefit you guys. So for those of you who want access to my premium channel, all you have to do is send me a message on Telegram, follow the channel, follow the steps inside of the Telegram, and I'll see you guys inside the channel. So with that being said, as always, please, if you're watching this video on YouTube, I don't want to beg you, but I do want to explain to you guys that improving my algorithms only happens when you guys smash that like button. So please do like, comment, subscribe, and I'll see you guys on the other side. Peace. Okay, so we're going to start off with the economic calendar, and we're actually going to have a look at what has taken place this week. Now remember, guys, I've always told you that the fundamental aspects are really important. So we're going to go over the economic calendar, and we're going to digest that on Tuesday we actually had the Royal Bank of Australia's interest rate. They kept the rate the same, okay? We also had the Japanese yen interest rate, and they increased their interest rate for the first time in over 20 years. This is really important. I've spoke about this on previous episodes, but with the Japanese yen increasing their interest rate, I'm telling you guys, look out for the Japanese yen, okay? I think they're going to be on the rise over the next coming weeks. I think right now, of course, there's been a lot of different factors as to the reason why the yen actually lost its strength as opposed to gaining strength, but watch out for the Japanese yen. They're definitely going to be on the rise. So then going into Wednesday, we had the FOMC. Okay, we had the FOMC projections and statements, which is pretty much where the Federal Reserve was speaking, and we had the federal interest rate decision. Now, the United States dollar, they kept their interest rate the same at 5.50, and this did show the dollar's strength of hand. Okay, the dollar showed its strength of hand, and the dollar simply pumped all the way up and it came all the way down. Now we're going to look at that in a moment's time. But then we also had GDP. We had GDP for the New Zealand Kiwi, the New Zealand dollar, oftenly known as the Kiwi. And their rate was actually worse than expected for the GDP. Okay, so that actually shows you that their gross domestic product Q4, okay, was not a good one. Okay, usually when we have a negative GDP for 2 consecutive reports, that is usually a sign of a recession. So we're going to look out for the next GDP result for the Kiwi. But as we go into Thursday, which was yesterday, which was the day that I wanted to do the midweek update. But look, guys, Wednesday was action-packed. Couldn't really find a moment to record. Thursday, action-packed. Couldn't really find a moment to record. So I'm sorry, guys. I'm really sorry. But Thursday, we had the Swiss franc interest rate, and we also had the Bank of England interest rate. Now, guys, all of these interest rates pretty much did remain the same apart from the Switzerland interest rate and the Japanese yen. Now, the Bank of Swiss, okay, their interest rate, they actually declined it to 1.5% from 1.75%. And what Switzerland has done is actually what a lot of these other central banks are going to do to follow. There's been many talks right now in terms of curbing inflation. To combat inflation, they would be lowering the interest rate. So what's most likely going to happen for UK, for America, for Europe, is that they are going to be decreasing their interest rate. Okay, when they lower their interest rate, this is going to incentivize investors to plow their money into the stock market, into the commodities market, and into, of course, you guessed it, the crypto market. Okay, the bull run season is going to be back. Now look, I'd like for you guys to comment below, let me know what type of videos you want me to do. I'm not into the business of jumping onto a YouTube video and just waffling for half an hour, guys. I want to give you guys the facts, the figures, the energy, and all the right information so you can get in and get out. So let me know if you guys want me to cover any specific topics, and I'll cover those in the future. But yeah, so we've also got initial jobless claims. Now the jobless claims report was actually better than expected, meaning there was less people reporting jobless. And then we've also got the S&P Global, which is the PMI results. One was positive, one was negative, and then we had the existing home sales, which was actually positive. Today we've got Jerome Powell speaking. Again, he's going to be speaking about how we can combat inflation. So it's going to be really interesting to see what happens. We can see here on the right hand side, all the markets are green. The stock markets right now is green, 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 green. So let's head over into the charts, okay? And I'm gonna start by showing you guys this BTC USD trade, okay? This Bitcoin trade, I spoke about Bitcoin previously on the previous sessions that I've done with you guys. But I've sent this trade out inside of my community, okay? I've sent this trade out inside my premium community, and we're currently over 2,000 pips in profit here, okay? You can see from this trade here, it's come all the way down, 2,300 to be exact right now, and it's still dropping. Now if we look at it on a daily, I do think right now Bitcoin could definitely be heading down below 60,000. Okay, I would definitely like to target Bitcoin heading down below 60,000, because I would like to see Bitcoin come back and resurface around the $55,000 mark, and that would be the only place where I would contemplate actually purchasing physical. Oh, I say physical, it's not physical, but that would be the only place I would contemplate actually digitally getting involved with Bitcoin, okay? But from a CFD perspective, I'm expecting a bounce around the $64,000 area. Let's see what happens. Do we bounce down here and then push higher, or do we simply keep falling through the floor down towards TP3? I'm gonna let you guys know inside of the community. Another trade I sent out yesterday was gold. Gold actually showed us two take profit areas. We had TP1 and 2 hit, and then price pushed all the way up. You can see here it stopped us out and then price has come all the way back down again to where TP2 was. So I'm not really too fussed with gold. I told you guys on the previous episodes that gold has been so high that I'm not looking to get involved. I waited for price to push down lower, okay, and when price pushed down here and then it pushed back up, to be honest with you, when price pushed down, we could see this imbalance being filled. That was the reason why I actually had the second take profit target there, and the third one would have been a bit lower. But essentially what I wanted to see with gold here, guys, is I wanted to see gold push down. I wanted to see gold break some level of structure, come down to some area that was more meaningful, and we couldn't really get that. We couldn't really see that. We haven't seen that for quite some time, but because the dollar had its interest rate decision, like I told you guys, this gave an incredible amount of strength to the DXY. Now if we have a look at the DXY did momentarily, let's see here, you'll see the spike on the daily. Now the DXY is currently pushing up. Let's go on a 4 hour, let's see if we can see it. Okay, so when the news came out on Wednesday, okay, we had the DXY take a massive dive to the lower side. Yeah, the DXY pushed all the way down, but what it actually done was the DXY gapped up, okay, and then it pushed all the way down. Now it pushed down, it gapped, it came down a bit more, and then it started shooting higher. Okay, now of course what you guys need to understand is with gold, if we go back over to gold here for a second, gold did also on Wednesday, okay, here we are on Wednesday, gold was pushing up. So it's not necessary to say that because of the federal interest rate decision on Wednesday that gold started pushing down. No, gold started pushing up. But what comes up must come down, and eventually, of course, the reality check came into play, and then gold started pushing down lower. So there's been a lot of variable factors as to the reason why I took that trade. and I want to share with that. I will be sharing that with you guys who are inside my my Telegram channel. So make sure you're inside there, guys, so I can, you know, spend some more time on giving you guys some more trading tips. Now USD JPY is approaching a 34-year high. Does it take out the high? Maybe it does. I'm not too sure. I looked at this pair the other day, and I really did think that we could get a short, but I was wrong. Okay, I was wrong. We couldn't get a short on this. I'm going to be really interested to see if we do take out the high, but before I even show you any yen, what I need to show you is the JPY basket. A lot of you will have no idea what this is. The JPY basket is going to tell you the strength of the Japanese yen. Now, this is going to push up. If this pushes up, the only area that I would want to sell, I would contemplate selling. Let me highlight the area for you guys. I would only contemplate selling inside of this area here. Okay, now I'm not actually trading the Japanese yen basket, but what I do is I use this as a cross reference to actually trade other pairs containing the Japanese yen. So because this is going to be pushing up, actually, okay, if it can continue to push up, I would favor a USD JPY short. Okay, because if the yen grows stronger, USD JPY is going to come down. Now, what you would have noticed this week alone, based on the interest rate decision with the yen, we saw the yen get incredibly weak, which is essentially the reason why the yen started pushing lower, and now the yen is trying to recover. Okay, naturally, over a longer term perspective, this is going to be good for the yen. So I didn't see these buys, okay, because I'm waiting for a sell. So right now, it's the end of the week. It's been a phenomenal week. I'm not going to take any trades anyway, but I would like to see how this week closes, especially how today's candle closes. We've got the Fed speaking, but ultimately with the Japanese yen basket, if we go on a weekly here, the weekly we have taken out the low. Okay, we have made a lower low, lower high, lower low. So let's see if the next week's candle could actually push up for us to make a lower high. Okay, so in short terms, what I'm saying to you is we want to bet on the yen. Okay, we want the yen to recover, to show us some strength, so that we can think about taking some shorts on USD JPY, Euro JPY, to say the least. I'm going to show you guys USD Mexican peso. Hold tight, all my peso traders. Now look, guys, the peso. I sent you guys a trade here. We got 2,468 pips. Price came back down. Okay, the entry was a bit more scruffier. I'm not gonna lie, the entry was a bit more scruffier. I ain't gonna lie. Reason being, when it came down here, look at the time, guys. It was 5 a.m. Okay, that's a lie. I'm in Dubai. It was actually 9 a.m. for me, but I just wasn't on the charts. Okay, it's Ramadan right now. I'm fasting. I wasn't awake. I was sleeping. Okay, I was sleeping, so I missed a couple of these entries. I wanted to see if price was going to play around or if we really was going to actually push up higher, and I believe the entry that I got, because I just put this on the chart, the entry was right here. Yeah, the entry was there. It was there. So I ain't gonna lie, the entry wasn't good, but because the entry was so high, I had to cover the SL. Okay, I had to cover the SL. I had to cover the candles, excuse me, but we're now risk free because we've hit that TP1 and we're now pushing up. So let me just show you guys on the TP1 what have we got. We've got 500 pips. We're pushing up to the second one. It's going to be 1,000. We're going to push up to the third. It's going to be 2,000. So guys, this is another prime example to tell you, why foreign pairs are really good. I told you guys already, if the dollar is going to be strong, okay, that is predominantly going to push this pair up. If the dollar's going to be weak, that's predominantly going to push this pair down. The Mexican peso, the Mexican peso doesn't really have much significance inside of this pair. It's very rare that the pair is not, this is not going down because the peso is getting stronger. It's going down because the dollar's getting weaker. So, the spreads might be a bit large on this. You might have to be a bit patient with this. But guys, look, if you can catch 2,000 pips across a day, 2, 3, 4, 5 days, a lot of you work a 9-to-5 job and you have to wait a whole month to get paid once, which means you get paid 12 times throughout the year. So what's waiting 5 days, 6 days for you to actually catch 2,000 pips, for you to make 10% of your account balance? Why not? So yeah, I'm gonna end the video there because I've showed you guys USD Mexican peso, I've showed you guys Bitcoin. Both of those two trades have been able to show us over 5,000 pips this week alone. And then we've had a ton of other trades as well. We've had Euro USD, we've had USD JPY, we've also had gold. Gold gave us over 120 pips. So look, I want to stop it there. Don't want to go on too more. Don't want to ramble on. It is Friday. I'm going to see how the markets can play out. I would like to see price push higher, take out these highs here with the peso. But essentially, guys, I want to give you guys this moment to say, if you've watched this video, you've come towards the end and you haven't smashed that like button, please press the like button, subscribe. You know the vibes. It's lit side. With that being said, the link in the bios for you guys to get access to the Telegram. I want to appreciate you guys for staying with me today. It's been a quick one. The reason being, sometimes when the markets are great, there's not too much to say. There's not too much to say, guys. So keep your eyes on what's happening throughout the Fed speech this afternoon. If you're not already inside my Telegram, you need to get inside there so that you guys can stay informed and up to date when it comes to understanding how the markets are moving. So yeah, that's it. I'm done. Trade safe. Remember, every day is money day. Peace.